It is. Let's go to Market Watchers. Mark Matson and Ted Oakley. Ted, another phenomenon we're keeping a very close eye on is the 10-year note. I don't know at what level people tend to pounce in and buy it rather than stocks, but they tend to get in at higher levels as this goes higher. Right now, from a high of around 2.88 today, 2.87, now down to 2.84. But what do you make of that and how this back and forth between stocks and bonds goes?
Well, I think, Neil, that what happens is people have got in their minds that they're going to get this big move in the bonds. You know, if you look back a year ago, it was about 262 on that bond. It's not that much higher, but it's enough to really make people think. I personally don't see it a lot higher, and we have just too much debt to really crank a lot of move into these interest rates here. I think they have to do some. They'll move some further, but it's a tough trade for them right here.
How do you think, Mark, the markets are going to adjust to a world order that says central banks will not sweep in to save the day?
Yeah, one of the toughest things I have to do with my clients, we have 33,000 families we work with, is to pound it into their heads that they should never, ever panic. And you're seeing a lot of investors panic right now with the market down, as you said, almost 10%. The reality is no one can predict the market. It's perfectly efficient and random. Only new information is going to turn the prices. Consider this. 3 out of every 4 years, the market is up 21%. Only 1 out of every 4 years is it down 13%. If that was a game in Vegas, you would never take your chips off the table. So long term, 20 years, not 20 months. And if they do that, they have a great chance to have long-term rates of returns in excess of inflation. So my message to all investors is don't panic. And as a matter of fact, markets are down, buy more equities as they drop.
You know, Ted, you could make the counter-argument of that this last 9-10 years has been an aberration, that the bull market is getting a little long in the tooth, albeit, with slow growth that makes it uncharacteristically tepid over the years, but long nonetheless. At these session lows here, where the Dow's down 520 points, what would turn this around, leaving aside the cooler heads that you hope prevail?
Well, I think people have to realize, we're still 10% higher than we were in September. We thought the markets were reasonably overvalued coming into the end of the year, and we really thought they were in January. So we still think they're reasonably overvalued. So there's nothing makes us want to really come in and make a big sea change right here.
All right, gentlemen, watch very, very closely here. Again, we're following these markets from their highs, not only what's going on today in the Dow.